In our recent posts, we've been talking about something subtle, how pressure builds quietly inside the market before it shows up in headlines. Today, I want to take the time to walk you through one of the most important slides in the January 2026 monthly report that came out. And that's because this chart visually confirms what we've been discussing. This isn't about whether the market is up or down. It's about understanding the structure of the market and the trends and where leverage is actually forming. So let's take the time and look at it together. With the help of this monthly chart on single-family market trends, we get a chance to look at some things. Notice here in the top portion of the chart, you see effective months of availability is 4.3 months. Now, here's what matters. Months of availability measures how long it would take to sell all active inventory at the current sales pace. And if we look at the trend line moving from 2021 through January this year, notice how inventory compressed dramatically during 2021 and early 2022. That inventory was under 2 months of available inventory at that time. That was an extreme seller-dominant environment represented when it's graphed, so you can actually see it. Now, look where we are at the end of 2025 going into 2026. The trend shows that we've climbed to 4.3 months of inventory, and that's up nearly 30% year over year to where we were. So yes, that tells us supply has expanded. But here's the nuance. 4 to 5 months is considered a balanced territory in inventory, not an oversupply. So what we're seeing still doesn't signify a weakness in the market, but it's not an oversupply. But it does tell us we're seeing normalization, and normalization creates strategy. Now, remember I said that. Normalization creates strategy. That's going to come back later. For now, let's notice the bottom chart. And we can see time on the market there is 30 days or less. You can also see that 41.8% of closings are still happening within 30 days, and that's critical. This means that, yes, inventory is rising, yet nearly half of properties are still moving quickly. What does this indicate about the market as a whole? It tells us demand hasn't disappeared, and even with the influx of homes, the demand has become selective. Some misinformed may believe that this is a bad thing, but in high-value real estate, selectivity is not softness, it's discernment. Buyers are modeling decisions more carefully. They're consulting advisors, they're watching pricing precision. So when a home or a state is positioned correctly, it moves. So remember, I mentioned normalization creates strategy. And here's what this means strategically. This is referred to as structural tension. We have the dynamics of supply is rising, speed is stabilizing, but properly positioned homes still transact efficiently. That's strategy behind that. This is where inexperienced interpretation goes wrong. Many people see rising inventory and assume negotiating power has shifted dramatically. But leverage doesn't shift evenly. It forms around pricing, discipline, presentation, timing, and exposure strategy. And that's why this stage of cycle favors preparation over reaction. So how do you read this as a seller or a buyer? If you're a seller, this data says you must be precise, you must understand absorption rate, and you must price in alignment with real-time competition, not past peaks. If you're a buyer, the data says options have improved with influx. You have more choices. Pressure has eased somewhat, but hesitation on strong properties still costs position. And that's because demand still exists and is selective for the best properties. So the market isn't emotional right now. It's analytical. And analytical markets reward strategy. That's the key point. The bigger picture is, in our recent content, we've talked about lifestyle decisions, quiet timing shifts and how leverage builds before the listing even hits the market. This chart supports that thesis. We're not in panic. We're not in frenzy. We're actually in calibration. And calibration is where strategic advisors do their best work. So here's the takeaway. The market isn't loud right now. It's layered. Inventory is expanding, speed is stabilizing, selectivity for the properties is increasing. That combination doesn't punish preparation, it rewards it. So if you understand how to read structural shifts like this, which you do now, you don't chase the market. You position yourself ahead of it. And that difference changes your outcomes. If you like help interpreting how this structure applies specifically to your property, your timing, or your portfolio positioning, you can connect for a private strategy review. Because when you understand the cycle correctly, you move with clarity. And that's true at iModern Luxury. When luxury meets strategy, you win.